Hey everyone, welcome back to Corporate Decoder. Today, Nexalin Technology NXL just filed an 8K detailing their annual shareholder meeting, and I am seeing some big moves they are trying to make. Quick note, this is not financial advice, just my take on public filings for educational purposes. They held their annual meeting where shareholders voted on 6 key proposals, and the results might tell us where this company is headed. So Nexalin Technology Incorporated held their annual meeting on the 11th of August 2026. Out of all the shares available, about 63.2% were represented. This is important because it means they had enough votes to make decisions, which they call achieving a quorum. The big news from this meeting is how the shareholders voted on several important proposals. Let's dive into what they decided. First up, they voted to elect 5 directors to the company's board. Looking at the results, all 5 nominees received a significant number of 4 votes. Leslie Bernhard, Mark White, David Owens, Maryland, Alan Kasdan, and Ben V. Hu. Maryland were all elected, for example. Leslie Bernhard received 8705295 votes, which is a strong showing. Mark White, who is also the CEO as we see later in the filing, got 884066. For votes, this suggests the current leadership and board structure has the confidence of the shareholders present. Next, shareholders voted on the company's 2026 Equity Incentive Plan. This plan allows the company to give stock options or other equity awards to employees and executives. It passed with 8248630 votes. This is a common move for companies to attract and retain talent, especially in competitive industries. This next item is a big one and usually signals trouble or a strategy to avoid it. Shareholders approved amendments to their certificate of incorporation to allow for reverse stock splits. They can now do a reverse split anywhere from a 1 for -2 up to a 1 for -100 ratio. And in total, they could combine shares up to a 1 for -250 ratio. This passed overwhelmingly with 1245865 for votes. A reverse stock split is when a company reduces the number of its outstanding shares, which in turn increases the price per share. Companies typically do this to avoid being delisted from major stock exchanges, as many exchanges have minimum share price requirements. For example, when Kodak did a 1 for 20 reverse split in 2021, holders saw roughly a 40% additional drawdown over the following 90 days. A $1,000 position there became about $600. It is a signal that the company's stock price has been very low, and they are trying to artificially boost it to meet exchange rules. Shareholders then voted on amending the certificate of incorporation to authorize 10 million shares of preferred stock. This proposal did not pass. It received 7863517 for votes, but also had significant opposition with 1208690 against votes. Authorizing preferred stock gives the board more flexibility to issue different classes of stock with specific rights, which can be used for various financing or strategic purposes. But the rejection here suggests shareholders were hesitant about this particular move. Following that, the proposal to provide for officer exculpation also failed. This would have limited the personal liability of the company's officers in certain situations. It received 8239359 for votes, but was met with 772,759 against votes. This means shareholders are not comfortable giving officers that extra layer of protection, which could indicate a lack of trust or concerns about management's actions. Finally, shareholders ratified the appointment of CB's CPAs PC as the company's independent registered public accounting firm for 2026. This passed by a wide margin with 13362297 for votes. This is a standard procedure to ensure the company's financial statements are audited by an independent third party. So to sum up, the directors were elected, the equity incentive plan was approved, the reverse stock split was approved, and the auditor was ratified. However, the proposals to authorize preferred stock and provide officer exculpation were not approved by the shareholders. Looking at the broader picture, Nexalin Technology Incorporated is a healthcare and medical devices company with a small market cap of around $8 million. They have a very small team of only 8 employees. Recent news indicates they've been focusing on their revenue breakdown and earnings forecasts, and even had a study on insomnia that showed no benefit from a sham group sleep gain. This points to a company striving to find its footing and clearly communicate its value. The approval of the reverse stock split is a significant signal. It suggests the company is trying to regain compliance with stock exchange listing requirements, likely due to a depressed stock price. This move is often seen as a defensive one, trying to buy more time for the company to turn things around. The rejection of the preferred stock authorization and officer exculpation proposals are also noteworthy. They might indicate shareholder skepticism about the company's future plans or a desire for greater transparency and accountability from management. Ultimately, While the company has successfully passed key votes for its operational continuity and strategic flexibility, the market's reaction to these moves, especially the reverse split, will be critical in the coming months. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.